What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So there's some interesting news on a big merger with some stocks, which we will discuss. That's going to be my wild card stock. So right now we have 3 dividend stocks to buy now. One of them I have in my traditional IRA, and I'm going to be long in that stock, which I transferred all the way from Acorns to Fidelity for a traditional IRA. If I would have switched from a traditional to a Roth, it appears that I would have to pay a 10% penalty. So I didn't want to do that. Threw it in Fidelity and have a traditional IRA, which is beautiful because I can improve my net asset value, let this stock reinvest, and then once I hit 60 or so, just, take one stock out or one share out and, $100 here, $100 there, I'll have to pay a penalty, but, or I'm sorry, not a penalty, but a tax on it because it's a traditional IRA. But I really like what I did with that move from Acorns to Fidelity, and I'm going to discuss that stock. I am long in that stock. Another stock I do not own, okay? I did own it, sold it. Another one I did own it and sell it. And then at the end, we're going to discuss this big merger and some serious potential with this stock because of this merger. So let's check out these 3 stocks right now. So that first stock is Prudential. I switched money in my Acorns account, threw it in my Fidelity account for my traditional IRA, and I bought Prudential, okay? This is basically a Global 500, Fortune 500 company, okay? So they're like insurance, investment management, financial products and services. I'm pretty sure that they're involved also with like helping people with retirement accounts and everything. And they're a $57 billion business. Look at this, $57 billion they generated. Took a huge nosedive, okay? It went from how much was it? 124 to $55 with the nosedive of the pandemic hitting. So I find it very interesting with the stock that it has some serious growth. Actually has a very nice dividend yield, which I'll show you in a second. But these guys have a high dividend yield. They're not too expensive. And guess what? In the past 5 years, the S&P has beaten it. So that's not growing too fast if you're trying to save up money and throw it in there. For $100, you're getting a pretty good bang for your buck with this company, and it's just staggering a little bit, just staggering a little bit. It's not as fast as the S&P. Remember, the financial sector and the real estate sector took a huge blow, okay? So that's why people really capitalized in the financial sector as well as the real estate sector. Man, I threw money in rates like you wouldn't believe it, and that's why my dividend portfolios, that's why I'm generating some very good passive income, which of course I'm reinvesting my dividends with my dividend portfolio. But Prudential is the first stock I want to discuss. I want to show you its dividend history real quick. I searched a little bit. It doesn't look like they have a stock split history, but I want to show you its dividend history and how it's looking as a dividend stock because it's a very nice yield. I like that 3 to 5% range when I invest in dividend stocks. So I'm going to show you the dividend history of Prudential. So they really didn't on NASDAQ list the PE ratio. The dividend yield is 4.61%, annualized dividend of $4 and it looks like 60 cents, 4.6. And it's a quarterly dividend. It has increased its dividend over time, 58 cents, 70, 75, 90, 115 right now it is distributing its dividend. So that's a great stock for your traditional or Roth IRA. It's increasing its price per share. It's a great stock for day trading, although I like the dividend yield of 4.61%. And that's one of the reasons why I threw it in my traditional IRA, left it alone. I'm never going to touch it again, okay? Just let it reinvest, let it do its magic, and then go from there. Because look at this. It's increasing its price per share, okay? It's increasing its dividend, okay? It's not like super expensive like BlackRock. So that's one thing I just want to emphasize with you guys is, it's right around $100. It has a dividend yield of 4.61%. It's actually a pretty popular dividend stock from what I've read throughout or saw on social media in regard to the dividend investing community. This is a very good one. I'm glad I threw this in my traditional IRA. I could have done it with Apple and stuff because of the stock split, but I really like this dividend yield. I'm just going to leave it alone, leave it alone, leave it alone all those years. I don't even want to look at it. And I don't have to, it's just better to just leave it there and go from there and park it. So that's my first stock. So I'm going to say this again. Acorns, I may have to do a video on Acorns because the way you get charged, the way they manage it, you can make your own M1 Finance portfolio pie just the way they do it. You don't have to pay fees with those guys. So I would get charged like $2 a month just to have a Roth IRA or a traditional IRA, which is crazy. And with M1 Finance, you don't have to deal with that. That's basically, if you look at it, 12 times 2, that's $24 that you could have put in a dividend stock or put in your fractional share portfolio to increase your net asset value. So I just want to emphasize that. I'm glad I did it. Let's talk about this next stock. You might be surprised at this one, but you might not be surprised. So this is a decent stock, but we're going to check it out right now. So that stock would be Hanesbrands. I'm 35 years old, and the one thing with Hanes, Michael Jordan, was pretty sure he was kind of like the poster boy with these guys back in the day. And by the way, I'm wearing actually Hanes boxers right now. So they're a good product out there. I mean, they're a clothing company. They're very well diversified. Every time I go, run to Walmart, Walmart's another good stock. They're always out of Hanesbrands. Hanes has a lot of brands out there. And they have a lot of companies that they're linked in, or they're connected with. So these guys aren't going anywhere. They're $7 billion business. As I always tell people, cracking jokes, like I just discuss like Cleveland Indians baseball players, they go through players like we go through socks, and, clothing, everybody needs underwear. Okay. I'm just going to say that underwear rips, people grow. People are always going to need underwear that's wear and tear over time. It's just a really interesting thing to say, Hanes. But let me show you some companies that these guys are connected with real quick. So I'm on the Hanes website right now, and you just look at their products. I mean, these are shirts, shorts, boxers, t-shirts, sweatshirts, pocket shorts, socks. I mean, they carry everything pretty much. So everybody needs clothing, okay? So that's the thing about Hanes, is all this stuff that they have. Their customer service is pretty good over the phone, and everybody's gonna need t-shirts. They're not too expensive. I mean, I go to Walmart and grab white t-shirts for my scrubs and stuff. I wear white scrubs. I wear their socks. Their socks are pretty cheap too for work socks. So their briefs are very popular. And like I said, I'm literally wearing Hanes boxers right now. So, that's one thing that's really popular with these guys. There's a $7 billion business, as I was saying before, and I'm going to show you their dividend history. So one thing before I say something, it looks like it appears in 2015 they did a 4-for-1 stock split. That's the only stock split they have right now. They have a dividend yield of 2.84%, an annual dividend of it appears 60 cents. So it has increased its dividend over time, a little bit slower than you would want, but for $21.08, that's a pretty good deal. Again, as I just showed you on the website, look at how many products they sell. Walmart, I mean, all these big stores, they sell their products there, and people need underwear. People, underwear tears, underwear, wears out over time. So just think about that. Of all the times your tank tops, I remember I thought it was a hot shit Backstreet Boy, or, those type of people, Eminem, 99, 2000, wearing those tank tops and stuff. People wear tank tops like crazy. People, were, a lot of the Hanes t-shirts, like I said, I am a registered nurse. I wear their white t-shirts. They're a good deal. Their socks are a good deal. Their boxers. I mean, I can't even tell you. I think all my boxers are Hanes brands boxers. So just think about that when you're looking at products. Like I said, like when you got to do your homework when you're looking at stocks. Go to the store and look up something like this is how I figured out, OxyClean. Looked it up and I said, oh, OxyClean. What stock is this? Church and Dwight. I mean, this is when I started to learn how to dividend invest and understand dividend investing. And then I go to the store and I'm like, X. Oh, Unilever. Unilever. Let me look up Unilever. Whoa, or products like Newell Brands, all this stuff that's crazy, stuff that people use. Okay, remember McCormick Seasoning? I discussed McCormick Seasoning. That's a very popular brand. People love seasoning. People are trying to be cheaper now a little bit. At least I think so. But because people are tight on money post pandemic, and people like to meal prep and grill. You got seasoning. Okay, so that's just some things I want to let you know. In regard to Hanes. Remember, when you go to the store, go to like a Walmart or Target next time you're there, which are really good stocks to begin with, Walmart and Target. But just look at the stuff, the labels, or look at how much Hanes is usually sold out. I tell you what, the Walmart that I'm at, I'm pretty sure their stuff is locked up now because people would try to steal Hanes brands and stuff. And they actually had to open it and at one of them that I'm at and, hand you the stuff. So it appears to be a very popular commodity. So I'm going to go over one more stock real quick. I did own this one. I sold it. I bought the dip, sold it, threw it into another stock. But I really like this one stock. It's not going anywhere. It's just going to go up. But I took advantage of it just like I did with Prudential. So let's check that one out. So that stock would be Huntington Bank shares. So I had these guys. They're worth $4.35 billion, okay? And it's 35th of the world's largest banks in the United States. In Ohio, it's somewhat big, but not really. But again, in the past 5 years, it's been iffy against the S&P. And for $15.32, the decent dividend yield, you're going to get a good bang for your buck. Again, I sold this one. I'm considering buying it again because I like the dividend yield. I know it's going to increase its dividend over time. It's a bank. Really, I know when the recession happened in 2009, I think a lot of corporations or banks, you have to be really stupid to be out of business. I mean, with the regulations, with handing out loans, car loans, student loans, housing loans, loans on, motorcycles, anything you need for a loan, banks hand out loans like it's candy still. Now they're more careful, but again, they're still going to make money. And don't forget a credit card, okay? Even if you pay your credit card on time, when you swipe that card at a business, they have to pay a certain fee to that bank for them to use that. So I'll give you an example of one place that was such a pain in the ass for me in Summit County area. Marks, okay, they only did cash. And take a guess why? Because when you swipe that credit card, you have to pay a fee. Your company has to pay a fee, to use that credit card. These guys get money off of that. So if you owe interest, okay, if you owe extra for not making your payments on time, they're just show me the money, they're just loving that. But at the same time, if you make your payments on time, they're still getting money because how many times do you use, your cashback cards? You swipe it. Literally, I went into Walmart, used my cashback card, okay, today. And a few other things. I'll use my Capital One cashback card, okay, and swipe. They got to pay, the companies have to pay a fee. So if you go to a vending machine, use your credit card, they have to pay a fee. So these guys are not going anywhere. They're only going to go up. I'm going to show you their dividend history real quick. But first of all, let me discuss Huntington Bancshares with their stock split history. They have a very extensive stock split history. Obviously, right now it's not too popular, okay? But with the stock split history, but they do have an extensive stock split history: 5 for 4, 11 for 10, 11 for 10, 11 for 10, 11 for 10, 5 for 4, 11 for 10, 115 for over 111 for 10. So it does have somewhat of a stock split history. I wouldn't bank, ha ha ha, bad joke, but I wouldn't bank on that. But at the same time, you got a decent dividend yield, which I'm going to show you in a second. It has split its stocks. Banks are only going to go up. Okay, they have to do something really stupid. Another pandemic has to come in. A huge financial crisis has to happen. Something catastrophic has to happen for it to decrease its price per share again. And people like you and I, who are dividend investors, we're going to buy the dip and just reinvest those dividends. But let me show you its dividend history of Huntington Bancshares. Oh, this is when it gets good. 8 cents, 11 cents, 14, 15, 3.92% dividend yield, a PE ratio of 13.32, annualized dividend of 60 cents. I always say the phrase, if you invest in bank stocks, take it to the bank. Money in the bank, take it to the bank. You're not investing in people like Prudential and Huntington Bancshares, I would find they would have to do something so stupid to catastrophically destroy their stock. They're always going to make money from loans, okay? Huntington Bancshares, you have a credit card. Anytime you swipe the card, they get money. They're going to get money, okay? I think my honest opinion, I think people are somewhat smarter by using their cashback cards. I mean, when I use Capital One, I call them and then, make sure that my payments are made on time so I don't owe any interest and stuff. And let me tell you, it's very nice with my credit score. That's why I'm able to live in this apartment and deal with First Energy, which I did a video on. And, they're a decent dividend stock. But, some things like that are very interesting. And these guys, okay, these guys are not going anywhere, okay? I'm going to discuss, and this is the final stock that I want to discuss. I'm going to discuss a big merger that just happened with one of my dividend stocks that I own and some serious potential. So I appreciate you guys staying on here. We're going to discuss this merger, okay? This merger and the potential of this merger and how much damage Realty Income can make as a dividend stock after this acquisition of Variate. So we're going to check this out real quick. We're going to check out the price per share of O and its dividend history. We're also going to see how big O is and this acquisition that they got. So this is what I'm really excited to discuss. We have 3 dividend stocks. This is the wild card. I always give you a wild card. So that's why I want you to stay, smash that like button, subscribe, because we always like those wild cards too, because the wild cards sometimes, wild cards win too. Sometimes wild card teams win the World Series. So let's check this out right now. So here's Realty Income right now. Okay, they're down because of the pandemic. So they took a little bit of a nosedive with the S&P. They have increased. They are the monthly dividend stock. Don't forget that. They're the monthly dividend stock. Do have a little bit of a stock split history. I'll show you that in a second. But this acquisition, first of all, Realty Income's huge. So we're going to go on their website, check them out. We're going to look at their dividend history and then stock split history. But I'm going to show you how big they are. And then after that, I'm telling you, after we just do a quick stock and dividend analysis, we're going to see this acquisition, this company that they bought off. Okay, they're pretty much merging. Okay, and their potential with this merger to be a complete juggernaut. I just was discussing a stock that could be a rival with them, a monthly dividend stock. this just sets the bar. Agree Realty, corporation, they cannot keep up with Realty Income now. O has no rivals right now, and I'm gonna show you why. So let's check this out with Realty Income real quick on their website. So first of all, look at they're in multiple countries. So look at their distribution, their industry diversification, what I like about them. Apparel stores, aerospace, automotive, beverage companies, childcare, consumer electronics, consumer goods, dollar stores, drug stores, education, equipment services, food processing, general merchandise, grocery stores, health and beauty, health and fitness centers, okay, healthcare, machinery, packaging, shoe stores, telecommunications, theaters, wholesale clubs, transportation services. In the UK, look, they have healthcare, home improvement, and grocery stores. So this is what's crazy about these guys. Let me just show you their geographic diversification. Crazy. Look at this. Look at these properties they have in the UK. Number of properties, 42. Okay. The UK and the United States. Okay. Here's just Ohio where I live. 98% net lease, 341 properties. Look at Florida, 430, Texas, 831, California, 238. These guys are everywhere. Okay. These guys are powerful. Okay. Let me just show you their stock split history real quick, and then we'll do their dividend history, and then I'm going to show you their acquisition that they had. Okay. And it's crazy. And they actually have, I forgot to mention, 4 properties in Puerto Rico. So they're big. They're a big company. Okay. Now you're going to see how much bigger they're going to get in a few minutes. But let me show you their stock split history and their dividend history. So they have one stock split history, which was in 2005, a 2-for-1 stock split history. But now, since they made this acquisition, I'm thinking in my head, I own 100 shares right now, okay? 100 shares is a good amount. These guys grow like crazy. There could be a potential. And again, I'm not a financial advisor. I got a disclaimer and everything in my discussion section. But you're looking at a juggernaut now, okay? These guys are the monthly dividend stock, which I'm going to show you in a second. I mean, this is probably I think this is my favorite stock is O. I mean, I was very excited to see the merger and the potential with this merger, which is crazy. I mean, I'm still shocked at how powerful of a move this is. So let's jump to O's dividend history. So why are they the monthly dividend stock? 22 cents, 23 cents. Look at that, 21, 22, 23. It's going to get to 24 cents. PE ratio 60.13, dividend yield of 4.11%, $2.82 dividend, annualized dividend. Now I have 100 shares. What's nice is I'm starting to buy more and more shares, okay? These guys are increasing their monthly dividend. They are a very powerful stock. They have some serious potential, and they're only going to get bigger because of this acquisition, because I'm going to show you this company that they acquired, that they pretty much are merging with, and all the territory that is added because of this merger. Verate, in Latin, I usually think of verate, and but this is very interesting. Okay, 3,381 properties. This is what Realty Income acquired. 45.4% retail, 20.3% restaurants, 17.7% industrial, 16.5% office, 1% other. Top tenants: Red Lobster, Dollar Tree, Dollar General, Walgreens, BJ's Wholesale, CVS, FedEx, LA Fitness, Albertsons, and PetSmart. LA Fitness is actually a very big fitness company, okay? That is very exciting. You know, they're well diversified. This is what I like about these guys. Tenant diversity, 639 tenants, 41 industries, 38.7 in investment grade tenants, 61.3% not rated, non-investment rated. So the occupancy, 98.1% occupancy, okay? Their properties, 49 states plus Puerto Rico. I mean, look at this, 24-hour fitness. I mean, they're on their website showing you everything they got, okay? 797 properties in the Southwest, Mid-Atlantic, 621 properties, Pacific Northwest, 75, Pacific Southwest, 265, Midwest, 886 properties, Northeast, 190 properties, 9.6%. So let's see how many they got in my state in Ohio. 278 properties. Look at all these properties that Realty Income is sucking up, okay? They're sucking up all this stuff. And what makes this important, okay? Now, a real estate investment trust, they have to pay X amount of dollars to investors or else they pay a penalty, okay? This is going to be huge, okay? Because O really hasn't, for us as investors, O really hasn't shot up too much, okay? The S&P has done a little bit better than it. You have a 98.1% occupancy, and O, let's just say before the acquisition, the occupancy is very high, okay? So this is what's exciting. They're bigger. They're stronger, okay? They suck these guys up, man, and this is going to be very exciting because everybody loves Realty Income stock, okay? I love it. You love it. Anybody that's a dividend investor, if you don't buy O, I'd be very surprised. If you don't like O, I'd be very surprised. They own a lot of properties, okay? A lot of properties that are good dividend stock companies as well that O owns. So this is something that you should probably capitalize on because investors and people on Wall Street are going to take notice of this, and the price per share of O could jump up significantly. There could be a potential stock split history. Again, I'm going to say this again, I'm not a financial advisor, but there's a lot of potential with this merger, and I really think the dividend is going to increase, as always, but it's going to be a lot more powerful. The dividend is going to be a lot more powerful, okay? I don't see it decreasing its dividend. When you pay rent and you get appreciation and stuff, people have to pay more, you know? And each year I pay more being here, unfortunately. But it is what it is. It's like less than a mile from my place. I'm walking distance from downtown if I need to grab a drink or hang out with friends or something. I barely pay anything for gas. My electric bill is not bad at all, despite First Energy, because I open my windows all the time, especially in the spring and summer. And the thing is, real estate took a huge blow, okay? The rates took a huge blow. I just showed you a video of my rich uncles taking a big nosedive, and I don't know how much I'm going to get back because I mean the rate was gone. The rate is done. The board, and everybody made a vote, and I probably lost some money, but if I sold some investments, maybe I can, I don't have to pay capital gains, or I don't have to. Well, I had to report my losses, let's just say, and it might be significantly. But I'm so prepared and well diversified that it's not really that much of a deal. Let me just say, I'll probably, I'd have to look at the statistics. I may have to pay capital gains. It just depends on my losses and everything and all that. Let me just, don't quote me on that. I'd have to look at 2021. So, that's one thing. And obviously I have to be I have to be very on the dot with my stuff. I don't want the IRS on me, so I don't think anybody does as an investor. But those are the 4 stocks. I gave you the 3 stocks and the wild card. Let me know what you think of these 3 stocks, as well as this merger and the potential. So if you guys are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Dark Dividend. You guys have a great weekend. My next video I'll post is probably going to be, I already told Matthew Ramey, I'm going to kind of give an update of my, how I incorporated his dividend investing strategy to make my quarterly dividends pretty much give me monthly income with my dividends. So I'm very excited with that. And I'm very excited with the potential to see everything happen and see everything grow. And, just this compound interest with realty income, with these dividends investing, and the potential with all of us as dividend investors to keep on growing. So you guys take care and have a safe weekend.